Hello traders, it's your boy Gift Ubakwe, and today I just want to talk about trading psychology and why this is really important for you to become a successful trader. So in my last video I mentioned that I was going to take a break from the market. I was going to try to work on my psychology because I know my strategy works. Like, I know it works because over time it has worked for me, but something was obviously off, and I can't blame anything else than my psychology because I became I started taking trades I was not supposed to take, and the trades that were actually good trades, I was not holding them. I was moving my stop loss to close. Everything was just not working for me. And guess what? Just while I decided to take a break from the market, this amazing trade setup played out. And as much as I didn't maximize this, I just want to show you this to actually confirm the fact that strategy most times is not a problem. Strategy most times is not a problem because the way I trade has been proven time and time again to work. So the problem obviously was my psychology. Look at this beautiful setup. So from the daily, let me just break this down for you to show you exactly what I was looking at. All right, from the daily, if I let me just clear this chart. Let me clear the chart so you can see, and probably let me just replay this. No, if I replay this, you won't really be able to understand because I want to be able to show you this on the 15 minutes time frame. All right, so if you look at this, the market broke this high some weeks ago, and then I always trade impulse and correction, like I would always tell you guys. All right, the market broke that point, and so that point was no longer relevant for us. Now we come to the latest price action. You would see that low over there, and then you would see this high over there. Now, but the market is giving me something that looks very nice. This is a pattern I like trading. It's the ascending channel, and this ascending channel is a reversal pattern. It's a reversal price pattern. So I see this, and immediately I'm like, oh nice, okay, let's see where this takes us to. All right, at this point, if you look at the date, let's look at the date here. So this was happening July 21st. So I think July 21st should have been probably this week. Not sure. Let me quickly confirm what day July 21st was. I just want to show you something about psychology here. This is a very important lesson, guys. Very important lesson. So July 21st was a Thursday last week. All right. So at that point, the price was here. This candle here was July 31st or 21st. This candle right there. All right. Now let's take this down to the 4-hour chart. If you watch this video to the end, you really get value from it. If you go to the 4-hour chart, this will become clearer, so you can clearly see that we have this beautiful ascending channel. But guess what? The price broke this channel. Now I don't trade trend line, so I don't trade break and retest as most people trade. The chart broke that point. How did it break it? That's the question I always ask based on my strategy. How did price break that point? Well, price broke this point impulsively. You can see, just with 3 beautiful bearish candles, price broke that point. After price broke that point, what my strategy asks me to look for, what I look for with my strategy, is a correction. This is it right there. This correction right here. Okay, this correction right here is exactly what my strategy says to look for. If you go to the 1-hour chart, this even becomes more juicy. This would have been this trade alone would have made me a lot of profit, enough to pass my challenge, enough to make another withdrawal. That is why my psychology has to be right, because if my psychology was in the right place, I would have patiently waited for this setup. Now let's see. If you go to the 15 minutes time frame, you would see all the beautiful entries. all the beautiful entries. Now this is what I've been doing. This is what I've been doing, guys, that has made me this emotional, that has brought me to the place where I had to revisit my psychology. This is what I've been doing, taking setups right there. But the thing is, nobody knows when this correction is going to be completed. Nobody knows when this correction is going to be completed. So if you take setup over there and place your entry, because I always do sell stop or buy stop, you know, and that's another thing I stopped doing. So I was entering I was entering the trade instantly, all right, and that was not working out for me. So this would have been a setup. As much as I've told myself I'll stop taking setups like this. So if I taken this setup, yeah, nice, but then I'm taking this out of my trading. I don't take those kind of setups. So my kind of setup, I would wait for a breakout of this ascending channel. Don't forget where we started from the higher time frame. We've gotten to the 15 minutes right now where we're looking for entries. I would actually, what I would do according to my strategy would be to wait for the breakout of this entire correction. I would wait for the breakout of this entire correction. Yeah, and guess what? That happened right here. What day did this happen? On the 27th. This very week we are talking about, guys. So if I was psychologically sound in this, I would have taken this trade. So 27th was just 2 days ago, Wednesday. But I missed this because I was not in the right place to actually look at this. Now look at this. This is a beautiful entry that meets all my criteria. This beautiful triangular shape right there meets all my criteria. I would have just placed, you know, an entry down there for a 20 pips. This would have actually given me very nice profit, right? Say 20 pips stop loss. This is exactly what I would have done. All right, just this 20 pips stop loss. Nice, beautiful. Now this would have been an amazing trade. Of course I would hold this trade, you know, the way I trade, I hold my trade for some days, some time, 2 days, 3 days. If it takes me a week, fine. Now that was a beautiful trade. But see, this strategy is so amazing that it allows you to scale in. So after that trade was taken, this would be the next point. This is probably the first take profit, but I don't just take profit. What I do is I look at how did the price get to this point. Did it get there impulsively? Did it get there correctively? In this case, guess what? It got there impulsively. So it broke this impulsively. So this tells me that the price is still going to continue to the downside. If it had gotten there correctively, you know, with weak candles, then I would probably adjust my stop loss and bring my stop loss closer, because that's the sign that the price might revise any soon. Okay, but guess what? Because it broke this impulsively, what am I looking for? I'm waiting for this correction. So I'm happy to hold my trade. I'll probably just lock in 1%, so just in case anything happens, I would know I'm not losing my, like, it's not a waste of time. Okay, so I'll lock in 1%. So this is exactly my strategy I'm breaking down for you guys. Okay, now I'm looking for the next entry, and what do I see? I see a correction. I would wait for this correction to form. I see a correction, so I would have taken this probably. Yeah, I would have done this if I was looking at this in real time. This formation right there, beautiful setup. So I would have taken this trade. I would have done this, place my sell stop order down here, something like so, place my stop loss up there. I think, let's see, adjust this for 30 pips. Well, my stop loss is not always fixed. I try to stay within 35 pips. This would have been perfect. So 30 pips, I would have waited for that. But guess what? I would have been triggered into this trade right there. I would have been triggered into that trade, and I would have lost this. But it's fine. I would have lost 1%, and I would have watched this trade to see what is happening. I wouldn't have given up, because this impulse is just too strong. This impulse right here is just too strong for me to think, you know, everything has stopped. I would just know that this correction is evolving. Okay, then I would evolve with it as well. What I would do is I would focus on this upper part right here and wait for this correction to show me that it's completing. Okay, Now the moment this happened, the moment this right here happened, and I saw, give me a minute just to show you what I'm looking at. I saw this rejection right there. What would I do? I would draw this like this, okay, as another correction. You can see how this is shaping up already. So this would have been another correction, and then I would go back to I'll go down to the 5 minutes to see what happened right there. And you can see clearly on the 5 minutes, this also gave me a lower time frame ascending channel. You know, ascending channels are always reversal patterns, so this would have been another entry for me. So I would have done this. Don't forget, I've lost 1% already in the course of this trade, but it's fine. I would have done this, adjusted this that way, and adjusted my stop loss just above this point. All right, just above that point. So take that out quickly. I'll adjust my stop loss. So that would be, let's say, 25 pips. Nice. So that would have been another entry, and guess what? Price would have tagged me in, and I would have locked in another 1%. At this point, the moment price moved in and tagged me in and gave me 1%, guess what? I would move this other trade to where the 1% is. So this would have been 6% already in profit, and this would have been 1% running in profit down here. This is exactly why psychology is king, guys. Psychology should not be played with. Now, what's the next point? If you go back to your 1 hour, I would have been holding this trade for probably 2 days now, or a day plus. So if you go back to the next point, this is the next value area, and that's another next value area down there. Now, we don't just close trades in this strategy. We look at how did the price approach this area. So if you agree with me, if you look down there, you see that the price actually approached that area, you know, impulsively. This candle came with such impulse that it broke that area. All right, and then I quickly just felt like, okay, immediately I would be like, okay, let's see how the price reacts when it comes up back there. So that becomes another value area. So because I like my chart to be clean, I would take this off because I already know what I'm looking for at that point, you know. Then I would go back to the 15 minutes and see what the price is doing. I'll monitor the price from there. So I can see that the price never came up to this point, so I would quickly, you know, follow the price as it continues to give me structures. So this is the next value area, but the price also didn't get back to that point, and guess what? There's another value area down here, and that's where the price actually came to. So I would quickly do this. You know, this gives me another sense of correction right there. This gives me another sense of correction right there, and I would have this. So I'd have probably done it this way. Okay, now would I have gotten an entry here? I think so. Now how would I have done this? Because this now gives me a structure. Because of this structure down up there, I would go back to the 5 minutes and see if I can find an entry over there. All right, and guess what? I see this correction in the 5 minutes time frame. This is, see, once you see these things, you actually can't unsee them. It can take time to see them, but the moment you start seeing them, you can't unsee them. So this would have been my entry down here. I'd have entered like this with a sell stop order. I'll do 20 pips. All right, 20 pips. Now this would have been, I'll set a sell stop order and wait for the market. Guess what? This would have been 3 different positions on one move. This strategy is crazy, guys, if you can be patient enough to wait for setup. You know, this would have been 3 amazing moves, but because my psychology was messed up from the beginning of this week, I couldn't maximize on this. Now look at this. I would have waited for this to play out, locked in 1%. In fact, at this point, because of what I'm seeing here, this kind of formation down here, I would have become a little bit more aggressive with my stop loss. So I would have moved this all the way down here and locked in at least 4.5%. all right, and then I would have also moved this one to where I have 4.5% down there, and guess what, this would have been 8% running profit right now, and I would have also moved this one to that point where I have this, and guess what, this would have been 15%. What challenge am I doing that I wouldn't have passed with just one trade? You see how this begins to sum up. This is why your psychology is very important, guys. You must at every point only risk what you can afford to lose, so your psychology will remain balanced, and you journal your trades and you ensure you're not taking stupid trades like I took. I was risking 3%, I was just taking losses, back to back to back. This trade setup and I've been forecasting this trade for some time now, but I was taking stupid trades. This trade, 15%, 8%, 4%, this would have given me nothing less than 22-23%. I would have easily passed my evaluation phase. I would have easily made another withdrawal on my $10,000 account, but that didn't happen because my psychology was not in the right place. So please, guys, I hope you learned from this. Understand that your psychology is key. The moment you find out that your strategy works, then you must also learn to stick with your plan. Stick with your plan so you can maximize moves like this that falls into your trading strategy. I just wanted to put this video out there. I hope you understand what I mean by allowing your psychology to be in the right place so you can maximize moves like this. I actually still think this price will go all the way down. I think this price will come all the way down here because I don't see any price action that would stop this here. This is a very clean price movement, so I think the price is going to move all the way because this is the next point where the price can react. Okay, so let me show you what I'm looking at now. I think this is going to be a wider structure as well, so I would do this like this. I would expect price to come all the way up there. Get the ray line tool and just put it there. So I expect price to come all the way up there and form something like this, either in this 15 minutes time frame or in the 5 minutes time frame. Form an ascending channel that would allow an entry up there. Okay, something like so. Just get that. So this will give another entry up there. Okay, so but because I'm not going to take any trade this week, I probably won't take this. I probably won't take this trade, but this trade can actually give another 5%. This can actually give another 5%, easy 5%. So I expect this price to come all the way up and form some corrections like so. Just like we had, let me show you quickly. Just like we had up here, something like that. Right, that's what I'm expecting price to do. So look at all this profit I missed out on. In 3 days, this price moved. Let's see how many pips. Let me quickly move to the daily time frame and see how many pips price moved in 3 days. And those 3 days were days I was not trading. Look at this, guys. Even 2 days, not even 3 days, because this is where I would have entered. 2 days. In 2 days, price has moved 370 pips, and it's likely going to move down here 514 pips in 3 days. This would have been massive profit based on the way I trade, but that's fine. The market will always present opportunities, so I'm not worried. I'm just learning from this, and I hope you all learned a couple of things from this as well. Psychology is key, guys. Psychology is key. Your psychology has to be top notch at every point. If not, you won't actually be a profitable trader. Just like me, I'm working on my psychology, and I hope not to come back to this place after this. I hope to stick to my plan going forward. This is a roller coaster. If you listen to some successful traders, they'll tell you it took them 4 years, 3 years to master this. And I'm not in a rush. I'm not in any haste. I'm not putting myself under any form of pressure. In fact, the best way to look at this is a learning curve for me, and I'm just trying to improve my psychology. And I know once I'm able to do that, my strategy is fine already. So I'm just going to keep back testing to develop confidence and to know exactly what I'm looking for and wait for it. And above all, guys, I've made that decision, and I hope by God's grace I can hold on to it, that I won't take trades inside of larger corrections like this. I won't take trades like that anymore. I would wait for those trades to break out, then I would go back to what I normally did before. Take trades like this and let them play. Alright, that will be all for this video, guys. Thank you for your time. I hope you got value from this. Please do well to like and subscribe to my YouTube channel. Like this video so it gets shown to a lot more people, so they understand that psychology is key. If your psychology is messed up, then you would miss out on the proper setup that I've given you lots of profit. Till I come your way next time. Stop, guys. Don't stop, guys. We can make this work for us. See you on the next video. Peace.